This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In tonight's video, I'll be going over the datasets, the earnings, and the SPY technical analysis for January 23rd, 2026. And with that said, let's go ahead and jump straight into the data. Now, I did not post a video yesterday, so I will quickly go over kind of yesterday's data as well. So we did have President Trump speaking about Greenland and a lot of other things at Davos, and that was extremely bullish for the market because President Trump walked back a lot of his aggressiveness towards the EU and Denmark and just Greenland in general. So that was nice. The market had a very large reprieve from the selling it was seeing on Tuesday. Now, with that said, we saw the Atlanta Fed GDP pull up very, very slightly. We saw the home sales or the pending home sales pull downward. That's not a good thing. That's a very, very large negative print. The 20-year bond did pull up very, very slightly in terms of the yield. Not a good thing, but this is something we kind of anticipated this week is that there is a lot of hawkishness right now. There is a lot of hot data coming out. So the long end treasuries can definitely see a bump in their yields. And especially with all the different conditions going on with Japan right now, there's just a lot of different macro conditions that can really uh, increase the yields currently. Now, for Thursday, we had the GDP data, and this is the 2025 quarter 3, quarter over quarter readings. Um, So this is the last revision, if I remember correctly. And today it came in at a 4.4%, which is, very good for the economy. For the market, that's usually not a bullish thing. Usually that would pull up in the DXY, the dollar, that would pull the treasury yields upward. And very likely that's a lot of what we did see today with the yields pulling upward was due to that GDP print. That's pretty much saying that we are not in a recession right now, that things aren't great, but they're getting better. That's speculative. Things can change very, very easily. So, um, take that with a grain of salt, but in terms of the data sets, that's what it is saying. Now, let's see, PCE, this is the October PCE, came in slightly weaker, kind of something we anticipated. Um, we know that quarter 3 and quarter 4 definitely did have a lot of dovishness slash weaker economic data readings, and I do believe we'll still be seeing a lot of that. Now, the GDP, again, it's extremely elevated right now, largely because of the lack of imports and the lack of exports. That can change very quickly. And even though the revisions pretty much are set in stone at this point, that the previous GDP was high, a lot of that increase in the GDP is, again, primarily due to those decrease in the exports and imports, helping boost that number. Is that a good thing? Not exactly, but we just have to roll with it for now. Um, Atlanta Fed GDP still 5.4%. Anything else major in that? There was the tips auctions that pulled up very, very slightly, and that is saying that they are starting to price in slightly more inflation. Getting into Friday's data, the 23rd, we have the S&P Global PMI data, so that has the manufacturing, the composite data, and the services. Again, I don't really weigh in on this data too much. They're expecting a very, very slight increase in this data, which that would be slightly bearish for equities. It would pull the dollar upward. It would pull treasury yields upward. I don't think that this is going to be a massive data set for the market at all because we have the Michigan inflation and consumer data 15 minutes after, and that's really where the current um, narrative lies is within the consumer market, within the inflation rates, and or with the inflation expectations and what's happening with the labor market. So, this Michigan consumer expectation, the Michigan consumer sentiment are really going to be beneficial for the market and in terms of providing a large move. I believe over the PMI data. Uh, Most definitely. Now we do have the U.S. leading index month over month revision for November. I don't believe that's going to move the market much at all. I do believe all the market movement will really come from the consumer expectations and consumer sentiment. No, there's not much to cover with the earnings today. We did have Intel. Now, apparently, they're not doing too well in their earnings. I did not actually have a chance to sit down and read their earnings, but I believe their guidance for the rest of 2026 was not the best. So they were having a little bit of selling. Yeah, currently they're down almost 12% overnight, so that's not good.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And jumping into the SPY technical analysis, as always, let's ensure our daily timeframes turned on and our moving averages and Bollinger Bands. Now, I did not make a video yesterday, as you all know, but yesterday we did have the day 2 of our lower Bollinger Mechanics. Now, we did not get the lower low that many were expecting. At least during the intraday, I believe it might have came during the um, pre-market. Yeah, we did get the pre-market lower low. So by all technical standards, this was a perfect lower Bollinger move. And from that range, we now were anticipating to pull up towards the 5 mile. The 5 mile on your screen will be shown at 688.20-ish. It's currently at 687.17, but with today's close at the 688.98, basically 689, the 5 mile will actually be pulling upward again. So in terms of all technicals, this is a bullish close, just on the very soft side, because the 5 mile will still be below the 10 mile and still be below the 20 mile as of tomorrow's open. Now, with that said, and I'm going to expand this just slightly, we talked about how when the moving averages really start heavily consolidating, and when we have that what I call moving average collapse, where we have all the moving averages lined up to be bullish or bearish, and then we have either a very large move downward to pull the 5 mile down, or we have a move upward to pull the 5 mile upward. In this case, it was a move to the downside, pulling the 5 mile downward, but we found a very, very large, what seems to be so far, support bounce. Now, the support bounce is really, really key. It's a bounce off of the lower Bollinger, it's a bounce off of the 50 mile, and it's a test of the 5 mile as of today, and that was a successful test to the upside. But with the market price currently being at 689.81, we're technically still in that 5 mile range. Sorry, my cat's like knocking my microphone out of my hand. We're still within the 5 mile range. So unless we see that really broken above or below, and again, while we're at these moving averages, keep your eyes on the VVIX because again, this is a very, very crucial and important tool. Today we saw the VVIX pull from, what was the high? It was 100 and something today. It's not showing.
on my screen currently. I want to say the high today was 110, but it might have been the 101.96. Anyway, regardless, we pulled out of this major selling zone. Okay, we're now back in this cautionary area. And we saw that within the price action over the last 2 days. Or, the last 3 days. We had the VVIX pull upward, and from that pulling upward, it has been consolidating back to the 5 mo. Well, the VVIX works the exact same way, all except in the inverse fashion, and we're now back in this cautionary range. With us being in this cautionary range, this can pull back upwards in terms of the VVIX, so we have to be very careful when we're sitting at these moving averages. Now, with us having the moving averages pretty much all on top of each other, we have the 5 mall, 10 mall, and 20 mall right on top of each other, and I will show that in a second here. With us having all three of those ranges on top of each other, and with the VVIX being in this yellow cautionary range, that's going to tell you almost exactly what the market's going to do from this next move. Either the VVIX is going to pull downward towards that 92 or below, and that will show that the SPY slash market and tech are going to be buying upward, or we're going to see the spike upward again into that dangerous red selling zone. And that means that the SPY and tech are going to be selling off from that consolidation within the moving averages. And let me hide the drawings. I don't want to show the drawings yet. And what I'm meaning by that is that as of tomorrow's open, the 5 mall, 10 mall, and 20 mall are pretty much not even a dollar away from each other. You have the 5 mall, which is going to be roughly around that 688.20-ish, could be higher, might be a little lower. Very likely it'll be around that range or higher, especially with the buying overnight. The 10 mall is at 689.87, and the 20 mall is at 688.82. So we're all just barely under a dollar uh, range within each other in terms of those moving averages. When that happens, and let me see if I can find a good example. When that happens, generally, this is one of those ranges, we generally have very large moves. One of those ranges right here. So when this happened to the downside, and we're not seeing the downside happen, we're seeing more of to the upside. But from this consolidation move, we had a massive move to the downside. With this consolidation move, we had a massive move to the upside. The previous consolidation move, it's kind of in here, but it was a move to the upside. The major consolidation point prior to that was pretty much buying to that upside again. So I want to really count this range to be that major consolidation. Um, and that just was a trend shift to the downside again. So generally, you get extremely large moves when you have the moving averages consolidating in the way that they are right now. We did have a little bit of consolidation in here previously. We have not been seeing this 20 mall testing below the 50 mall. We've been seeing the 20 mall continuing to pull away from the 50 mall, which to me that's actually a bullish signal. Um, I'd be very, very surprised if we see this pull downward over the next 2 to 3 trading sessions. Everything about this is telling me that this is a very, very clean lower Bollinger bounce. Here's an example of what happens when you have a major lower Bollinger bounce. Generally, you have the day 2 lower Bollinger move. I'm not going to talk about this one so much because we did have the consolidation to the upside, but we're not seeing the same type of buying that we were at this uh, lower Bollinger move. So from this lower Bollinger move, we had a big candle to the upside like we did in here, where we had that 5 mod test, we saw a successful 5 mod test, and we saw massive buying to the upside from there. And from that upside, we saw the moving out, or we saw the upper Bollinger expanding, and the lower Bollinger slowly pulling up from that. With the Bollingers pulling into each other again, that's really creating the room to create a major expansion either to the upside or downside. Now, with this range, we so far have not been seeing that downward expansion. Generally, I'd be fully anticipating um, a heavy rejection off of that 5 mile and continuing to push downward and expanding the lower Bollinger. And the way you expand the lower Bollinger is by pulling the 20 mile downward. Well, it takes quite a bit of selling or buying to move the 20 mile one way or the other. And this was not even close to enough selling to really move that 20 mil. Now, I am going to turn on the drawings for a second. It's not going to make a lot of sense yet, but we talked about this in the last few videos where if we saw major buying at this 20 mile range, we would expand. I wish my drawings would not get all messed up. We would expand this dotted orange buying channel. We haven't expanded it yet just because I want to see buying above the moving averages and the moving averages turn bullish, meaning the 5 mile above the 10 mile, 10 mile above the 20 mile, and basically everything aligned to push the upper Bollinger. Um, if we see that type of movement, then I will expand this buying channel downward towards that new support at that bottom, and that will show that very, very likely we will be seeing quite a bit of buying to the upside. We have had to expand this channel twice now. Previously, it was at this support, but we had the large move upward, and then we had some major selling. We had to consider whether we were going to create a selling channel from that point, but we saw large buying, and not just large buying, we saw a lot of closing of bullish structures, which is a bullish thing. If you close a bullish structure, generally you're going to see continuation of that. So, with us filling out a lot of this bullishness, with us seeing a bounce, and I'm going to turn off the Bollingers here just to make this a little easier to see. But with us seeing a bounce out of not just this red major liquidity zone, which that would suggest we'd be selling downward if we stayed within that range for too long. But we saw a bounce from that range, and we also saw a bounce from this secondary liquidity zone, almost exactly right off the top of that range. So what that's telling me so far is that this wants to head upward. Now, we do have two more levels to really contend with here. And I am going to delete this double top just for a moment because truly what everybody's looking at is, are we going to fill this cup back up to the upside? Um, and that's what I think is going to happen. I think that we're getting ready to have this cup fill back up towards that 696. With that cup filling, with this buying channel expanding, with us having a major bounce from two very deep liquidity zones that have been major selling zones prior. And if we can pull above this upper consolidation channel, basically at the 692, that's going to really open the way to completely crush the selling channel to also buy all the way back up to the upper Bollinger because we have not had a very clean upper Bollinger move since I want to say mid-November, if I remember correctly. It was the end of October, was our last upper Bollinger move. So market is very due for one. And overall, this structure is still a very bullish structure, even though this handle looks kind of wonky. But one thing I want to show with this handle, and I'm actually just going to edit this really quick. No, what I wanted to show here is that this is creating really large liquidity to create a inverse head and shoulders on the daily time frame. And what that will heavily imply is that we're going to pull up, pull down, and then push all-time highs. Now, I'm not really expecting this to pull downward very much. Um, I do believe we've kind of stepped out of those two liquidity zones, and very likely any form of right shoulder would be very, very small. I'm more so looking for this to turn into a cup and handle to turn up, into further upside. And let me see what that looks like on the 4-hour time frame. So it will probably make a lot more sense there. Yeah, that makes a lot more sense on the 4-hour time frame. It would fit right in that selling channel. We'd have a bounce to the upside, um, crush that selling channel, and then move from there. So I am expecting bullishness. I truly do not see the selling continuing from here. Um, Again, we would have to reject the 5 mile, and not just reject the 5 mile, but because the price is actually above the 5 mile and the 20 mile, we would have to fully retest and reject the 20 mile again too. And from that rejection, we would close this inverse cup to the downside towards that 677, 676 range, and that would push us back towards the lower Bollinger. Again, I am not saying that. I think that's likely not what's going on right now. We still see very, very immense strength within semiconductors, even with Intel doing very poorly in the overnight. We see stocks only down 0.50% in the overnight. That has it at the 346, which is, let's see, that puts us above the 5 mile still. Um, that is a upper Bollinger rejection, kind of, sort of, but that can turn into a cup to the upside on semiconductors. So, not exactly looking for this to continue to sell off. The ADL is a little wonky. Um, Again, when you're seeing money exiting but the price moving upward, that's generally not a good thing, but that can turn into a very large fair value gap to the upside. For example, if we start seeing quite a bit of funds pushed into this, then a lot of this, bullish price action will be pushed even further. So, semiconductors looking really strong still. The SPY is looking very, very strong. We've been in extremely, extremely heavy consolidation range. If we break this consolidation range, we should be pushing back to all-time highs. I'd be extremely surprised if that doesn't occur at this point. Now, next week we do have FOMC, and with the FOMC, it's pretty much almost guaranteed at this point that we're going to have a pause within the interest rates. Um, that's a neutral reading. And with the pause, um, so far we're seeing the market overall being bullish. So that's saying that even though the market is really narrative driven over having the interest rates cut, Um, they're not seeing enough economic strength or anything to continue pushing the interest rates upward, to cause massive bearishness. At least that's what I'm seeing with the technicals through the many different symbols we're looking at. And even within the HYG, this is the uh, high yield corporate bonds. This has just been pushing and pushing and pushing. And remember, I said that if we're going to see a continuation of equity selling, we would also be seeing that within the HIG. We're not seeing that within the HIG. We're seeing buying to the upside. We're seeing treasury bonds buying to the upside, even though we're having massive macro conditions wanting to pull downward against them. So it's very hard to not be bullish right now. We have precious metals continuing to push all-time highs. We have liquid, which this isn't a fund I talk about very much, but it's something I should. Um, Liquid is kind of like a HIG type investment ETF anyway. So if we're seeing liquid selling off, usually we're going to be seeing the market selling off. Well, liquid has been buying upward, and so far the moving averages are getting ready to start being bullish again. So potentially, I think we're getting ready to see a pretty big run to the upside. I do think that this is setting us up very, very well to have some very strong bullishness to the upside. Even with Nvidia here, we are seeing the moving averages not bullish, but they're getting out of the bearish territory. They're starting to enter this bullish range again. Yeah, I'm seeing a lot of stuff that I like. So with that said, I'm gonna go ahead and end the video here. Um, Sunday's video, I'm going to be talking about many different markets and kind of where I am anticipating each of these markets to be a whole year from now. So basically in December of 2026, January of 2027. And the reason why I want to go over that is because I really want to discuss kind of just the whole picture of what we're expecting out of not just the stock market, crypto market, treasury market, but what that kind of entails and implies to all the stocks underneath each of those markets. So yeah, Sunday's video is going to be a long one. It's going to be a lot of me talking. So if you enjoy that, then you will enjoy it. If not, then you'll just want to watch the first part of that video for the TA and, we'll go from there. Anyway, thank you as always for watching my videos, for supporting what I do, and hopefully what I do helps you with your trading, helps you with your technical analysis, or just understanding the market and economy as a whole. So, with that said, have a great weekend, everybody. I hope you have all been making great money this week. If you've been following the videos, you almost certainly should be up this week. I'd be very surprised if you're not, because I'm doing very well this week. So, yeah, take care, everybody. I will talk to you on Sunday.